So this is part 3, the final part of these big changes that are coming to the condo market starting Monday, August 3rd. So in our last video, we ended by talking about this chain reaction of what's going to happen if an HOA reserves are not properly funded. Well, if they're not properly funded, they're going to be in big trouble. So let's start right here. If the HOA reserve funds are not properly funded on Monday, August 3rd, and a buyer walks into a bank or a mortgage company and says, hey, I want to apply for a loan for a condo. If the funds aren't there, there's going to be a failed federal review. That just means that Freddie Mac and Fannie Mae are going to pull out of the neighborhood, meaning they are not going to approve loans in that neighborhood because of this. Well, what happens when Freddie and Fannie pull out of a neighborhood? Well, it's going to lead to a shrunken buyer pool. And why would that happen? Well, again, there's going to be a smaller buyer pool because the only people who will be able to buy condos in that community are cash buyers and people who use special portfolio loans, which usually have a high down payment and higher interest rate. Now, with a shrunken buyer pool, don't you think that condo owners, and this is how it's going to affect owners. Condo owners will have to price condos lower, okay? This is going to lead to lower condo prices, which is going to lead to lower appraisals, which is this fourth thing in the chain. So yeah, this leads to the fifth item in the chain, lower resale value. The appraisals aren't going to come in as high. They're going to have to lower the prices of the condos in the neighborhood to sell them. And once multiple condos sell at a lower price, that's going to become the norm. Those are the comps. Now, people who own condos know generally condos don't usually appreciate as fast as single-family homes. The impact of all of this, especially on older condo communities, they're not going to be able possibly, if they don't have fully funded reserves, to catch up on the reserves that they need. You know, when a neighborhood becomes unwarrantable, like I said, you know, even rates for condo owners, they may not be able to get insurance for inside their condo either if the neighborhood can't get a policy for the neighborhood. I mentioned in the last video that if these insurance companies out here, these large insurance companies, if they don't feel that the HOAs have the reserves and they don't feel that the neighborhood is worth covering, many of these neighborhoods are going to be dropped by insurance companies, which is another issue. A lot of these older communities have deferred maintenance, you know, again, because they didn't keep up with the reserves. Balconies that need replaced, you know, roofs, paint, etc. And these new rules go in effect everywhere in the US. Don't just think like Florida and places that have lots of condos. Everywhere, starting Monday. Knowing that these changes are going to go into effect on Monday, if you live in a condo neighborhood, you need to go and ask your HOA board if they have a recent reserve study that they've done. We talked about this in part 1. If you live in an HOA that's very disorganized, it's going to take a buyer much longer to close on a condo. We're talking 2 months, maybe even more, because the lender is going to require so many more documents from the HOA. So if you're a buyer who wants to buy a condo, you need to talk to your realtor and you need to get the HOA reserve study. You need to get the HOA profile sheet, any meeting minutes you can before you even put an offer in on a condo now. This is going to at least give you a little snapshot of what's going on in the neighborhood and then help you decide if you even want to move forward. Owners, I think you need to be grilling these HOA board members on the reserves, on what's going on. I think you need to be attending these HOA meetings. It's already your responsibility to know what's going on. Now, overall, I don't want you to think condos are a bad investment, you know, overall. There are actually many, you know, condo associations that are funded properly, and that's great. It's the ones that didn't manage the finances over a long period of time that are going to really feel this. So here's my opinion in all of this. So I think that this is a great thing for Freddie and Fannie to do, because I think that in the past, lenders were not required to look as closely into the HOA's finances as they should have, and many buyers are feeling the pain of a special assessment and other things. This is going to protect buyers and lenders. You know, our job as realtors is to provide education to our buyers and sellers and to provide really amazing service. But it's also our job to protect our buyers by giving them all the information we can so they can make the best informed decision. So if you have questions about part 1, 2, or 3, please reach out to me, email me, text me, DM me. I'd love to talk to you about this. And then if I can't answer your question, I will connect you to a local lender here who can answer your question further. But please watch these 3 parts if you live in a condo or if you are thinking about buying one in the future.